We're back, everybody. Not going to waste too much time reiterating what I've been saying over and over and over again. Just going to jump right in and expect more of that style soon. SPDas and IT are just going to be jumping in on their own and hosting the sessions without me. I'll come on every once in a while, but just expect us to get right to business. This is the plan for that. So I'll be jumping off and passing the mic over shortly.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
All right. Thank you, Igor, and welcome everyone. Welcome back to the next session, the New York 9:30 Eastern. It is now 9th of Jan, and let's get started off straight away with the hourly charts of Euro USD, followed by the dollar index, gold. Uh, we'll also touch base with pound as we did last session, and then we'll go through the coins. Okay, let's do a preferred wave count first, and then the alternate count as well, just in case if we are proved to be on the wrong side of the trade momentarily. That's quite possible. Looking at the daily chart, it is I'm getting more confidence on what we are seeing on the price action. It looks like a neat little wave 1 and 2 of a lower degree being carved out right now. And we are most likely heading north uh, before any other correction seen. Now that's the preferred wave count with the trade setups right now coming up on your screens. If you are joining in for the first time, then we are still at the optimum level of entry around 1.03 handle. Remember, we have taken long positions from 350 as well, and spread across 300 to 350. The stop loss goes at 1.02 double handle, double zero. So if this preferred wave count will work out at this point in time, and as we speak, it's a sideways activity going on. Either it is sideways or it is lower wave 1 and wave 2, some minus level. So the preferred wave count works to be well, we'll be around 300 points higher from where we are right now. In a quick flash, now we don't know, we are still about 10 calendar days before the major event, but I think it's not going to be dependent on that, but this is the preferred wave count, come what may. All right, the alternate count could be the drop is still subdividing into 5 waves, and that could be the lower degree wave 4 with one more low in place. Now this is the path of an alternate count. It's not the preferred count. The preferred count is what we just discussed. Okay, so but be prepared for one more low below a 1.02 as an alternate, which will be definitely taken as an opportunity. Yet to go on the long side. And that's the reason why we always keep on stressing. We are going to come up with educational series as well, stressing the importance of the how many lots to build and where the risk should actually go. It's about the actual risk and the permitted risk, which allows the number of lots that you can take. All right. So be very specific about the stop loss 1.02. Even if you get stopped out, it's okay. No one can get everything right all the time, but having a stop would really help us to plan our trades, our next possible trades. Okay, so for now, euro on the long side from 1.03 handle, stop loss at 1.02, targeting around 1.06, 1.0775. Okay, let's move on to the dollar index now. That's just the opposite of what we have discussed in the euro. Just so that we are aware, we are back into the buy zone of this uh, uh, uptrend line, and if this is a sideways wave four going on, there could be one more uh, push higher. So, in the case of dollar index, maybe if you are not yet traded on the short side, and if you want to do it a bit conservative, maybe you can wait for one more day or so. At least on the daily chart, it's showing a signal about a potential wave two being carved out right now. But if you have been taken shorts already, like what we've done or suggested in the past few sessions, then here is the wave count and the Fibonacci ratios extensions coming up. All right. And the preferred wave count is going to be minute wave one and wave two, with the third, fourth, and fifth coming up on the lower side. All right. So that's the preferred wave count. That's always going to be the preferred wave count with in the daily chart in view, because we always keep the first larger picture in mind and plan on the shorter time frame. So here's the preferred count. The target is somewhere around 105. Okay, so the entry comes around 109, 109.20 handle. Stop loss, just to stay away from the noise, 109.80 should be good enough. And the target comes to around 105, yeah, 106 and 105. We want just break it to target one and target two. But please stay tuned on these sessions, because we are going to keep watching the price action as again tomorrow in the Tokyo Sydney session. Let's see if it's a new high and a bearish divergence. We are going to get another opportunity on the short side again. Okay. Gold, actually, quite a number of counts are coming, but we'll keep things simple. Okay, the boundary which is being worked upon right now is between 27.25 and the particular low around 25.85 or so. And what we are seeing right now is a 61.8% neat little touch, which was expected in the previous discussions as well. So nothing to nothing which we were not nothing surprises me right now. As far as the preferred wave counts are correct, concerned, this is again an potential wave one and wave two in the making with 3, 4, and 5 coming up on the south side. It can. I mean, many can find it unusual where we are long euro. We're suggesting short gold and uh, short dollar at the same time. And as you might have noticed, if you're following currencies or metals particularly, that there have been times when gold was rallying along with the dollar rally as well. So it's not about yes, majorly correlations do work, but it's not only correlations that work. So we just follow the wave principle and the preferred counts and the alternate counts altogether. So again, the preferred count is that the second wave is in place and we should be ideally moving towards wave 3 lower, and then 4 and 5 subsequently. You can see the price targets coming around close to 20. I mean, let's take around 2,500 to keep it simple. So that's the preferred wave count. The alternate count could be it's a triangle already forming. So that I'll just draw the path of the triangle. Please remember the paths that we are showing is for the alternate counts. That could be the first wave, the second wave 535, wave sorry, wave A, wave B, C, wave D, and you never know, we may have wave E lower before the thrust wave higher. All right, that's the alternate count. Let me just draw or let me figure out. So B and D, we connect B and D, and then we connect A and C, and we can extend that. So somewhere around this zone, wave D should confirm, and then wave E dropping back towards that particular triangle support. Right, that zone is around 2,600. So we should be fair enough to at least book profits on the shorts which are suggested right now. So preferred trade count is shorting around 26, 60, 70 range with a stop loss around 27.30 and targeting around 25. The alternate count, if it's a triangle, we'll come to know. Let's keep it open right now. We'll take a call around the 2600 handle. All right. So that's the trade. Pound we were talking about. We were discussing about pound as well. So let's quickly run through pound as well. Now, although we got stopped out, the best thing which I see on the chart right now. Okay, let's do the trend lines, etc. quickly. What the charts are telling a story right now is that that particular wave, which is the fifth wave, has been accompanied by bullish divergence. Now, this is not what something that we are assuming or presuming. This is what the market is saying. All right. So, if we respect the story, the price action dropping and the RSI not specifically, it happens in the last waves, and psychologically, most of the traders get caught in this uh, wave where you are either long and then you start suddenly realizing that you're losing out, and then you get suddenly stopped out, and in the panic situation you get double shot. All right, this is what exactly happens, and I'm able to tell this precisely because it's happened a number of times in the past with me as well. When you are so emotionally involved with the trades that you get on the wrong side, and the problem is you get double on the wrong side. So that's why the warning: don't get emotionally involved. Have the stop losses in place. At this point in time, with the diverging scenario, an aggressive trader would want to go long, and a conservative trader would want to take the first resistance out with the price action and then go long on a dip. So I cannot draw the the preferred count right now, but this could be the next wave. We've already taken aggressive longs right around the 2280s in the last session, if you remember. But if you're a conservative trader, allow that peak to be taken out, and then we'll find out a trade on a retracement. And then we go like that. All right. So this is what is expected to happen, but we need to see price confirmation. This is what expected to happen on the basis of bullish divergence, which Pound is saying. Aggressive traders, we've already taken longs around 2280 with a stop loss around 2140, and target has been kept open. But believe it or not, if this bullish divergence has been identified properly, then it won't be uh, later where we can see pound go up to much higher levels, 27 or 28 in the next few weeks or so. All right, so let's touch base with the coins now. Uh, let's see where the price action is right now because been on the charts, the other side of the charts for the few hours. Yeah, so it is going as per what we have been anticipating it to do now. The stop losses are still intact, but I would not be surprised if Bitcoin tests the low. Let me turn it to the hourly chart to be more clear. So that could be wave one, two, three, or an extended wave three, wave four being working upon. And if that is a diagonal wave five, then the diagonal is almost complete. Let me just zoom in a bit. Let's uh, let's try and see if the diagonal is complete. It's one, two, three, four, and five. Let me try and connect one and three. Okay, it looks complete. It's a throw under here. So if the diagonal is complete, most probably we are going to head north from here itself. And ideally, the stops are still intact because we were suggesting 91, 1991. I think we are still away from that. And what has happened here in terms of the structure is we've had an ABC here, A, B, and C as a fourth wave. Now, if you have not entered on the long side, you might want to still wait around the 85, 86 zone. But if you have entered, you can stay long and we will re-enter around that price. But let's pick up on the RSI as well. It should be around 40. It's below 40, around the 30 mark. Again, the buy zone for the RSI range. It's quite possible that we should be seeing a bullish turn from here now. And by the next session, when we are back around the Tokyo Sydney overlap, we should be done with the downside. Right? We have one more leg left on the long side around 1110, 115, and 121. The target remains intact. The only thing is that the corrective decline uh, has taken a complex ABC, and corrective waves are always like that, believe it or not, most of the time. I was seeing Ethereum was on a better shape last time when I was here. Uh, when we were together. It's almost the same condition here. So it could be a running flat in the making. Possibly a running flat in the making for Ethereum. Hold on to your longs with a stop loss around the 3,000 mark with the potential target around 4,100. Unless that orange line takes out 2,700, I think we are good to remain on the long side with one more high to be seen around the 4,300 mark. Quickly, we've got two instruments to view. Solana, again, the same old story. It could be a second wave as well, but I think it's a corrective decline happening, or it could be a diagonal in place. But bottom line, we are let's not be concerned about which pattern is unfolding. Corrections are tricky sometimes. I see an impulse forming here, so it could be an A, B, C as well. It could be the second wave as well, or it could be the second wave of within the diagonal. Sorry, till the time prices stay above 177, we are good to remain on the long side. We are not ruling out any upside target of any coin at this point in time. It's around 280, 300 plus Solana. But the stop loss should be around 177. And Ripple, let's see if the wave E is complete or it is just about to complete. We have been following this triangle. It is still unfolding. Let me zoom in a bit. Okay. So this is what I was talking about, a triangle. I can label that as well quickly. So that's A, B, C, D, and either E is done or E could press one more time lower. But I showed last time when we were here, it's a 61.8% touch already of wave C. So ideally, technically, it's okay to pick up from here. All right, a push above 24. What? It's 2.4. Sorry, just missed a decimal. So 2.4. A push about 2.4 would trigger a breakout, and that would push ideally towards 3.7, I suppose. Yeah. Yes, 3.7. There you go. At 3.2 and 3.7. So the story in the Ripple, there's more confidence on this Ripple because of the triangle wave 4 in the making. The triangles are, as we have discussed earlier as well, triangles are good to be made money if you are able to identify it rightly, and the labels are also going as per the plan. All right, so one more thrust wave left for Ripple. And with that, I would like to bring a pause to this session, and we'll be back in the Sydney Tokyo overlap after a few hours from here. So
Thank you.
back to you, Igor, and thank you, ladies and gentlemen. We'll see you back soon. Thank you.
Thank you as well. Absolute legend. Um, much appreciated.
Thanks. Bye bye.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.